Hello traders, welcome to today's comprehensive analysis of the Nifty 50 index on our channel India Trade Talk. We'll be combining the latest price action, open interest data and potential trades for the next session, especially focusing on the monthly expiry. Stick around to discover the key insights and trading opportunities that you won't want to miss. Let's dive right in. Before we dive into today's Nifty analysis, let's briefly review the last session of Bank Nifty. The index opened with a gap down of approximately 0.73%, setting a bearish tone for the day. It faced resistance from 48,920 to 49,000 zone and showed directional movement downward until it found support at 48,400 to 48,438. During the day, the 48,670 to 48,700 zone also acted as a resistance once Bank Nifty moved below this level. The session concluded with the bearish candle indicating sustained selling pressure. Importantly, none of the conditions from our discussed possible trades were met, so we refrained from trading today. Though our expectation of closing below 49,000 level proved correct, but we never got the chance to enter any of the discussed trades. Remember, it's crucial to avoid unnecessary trades without a predefined strategy. Now, let's proceed with the today's Nifty analysis. Let's start with the current Nifty price data. The latest closing price for Nifty 50 is 22,704 with a high of 22,825 and a low of 22,685. It faced a good resistance around 28,800 to 28,825 zone after a big gap down opening in the last session and closed near to the day low, forming a bearish candle. On the 5-minute chart, Nifty 50 shows near oversold conditions with an RSI of 38.76 indicating a potential short-term rebound. The Bollinger Bands have a high of 22,768, a low of 22,691 and an average of 22,730. Bollinger Bands suggest volatile expiry tomorrow with a possible short-term rebound. Moving to the 15-minute chart, the RSI is around 29.38 indicating oversold conditions. The Bollinger Bands have a high of 22,781, a low of 22,700 and an average of 22,741, suggesting potential consolidation or a slight rebound. On the daily time frame, Nifty 50 continues its bullish trend, trading above the 50-day and 200-day moving averages. The RSI is 56.57, indicating moderate momentum. The Bollinger Bands show a high of 23,073, a low of 21,892 and an average of 22,482, which also suggests increased volatility. Based on this chart, we expect the price action to be highly volatile and bearish in nature. We expect the closing to be below 22,810 and we also expect the price to hit 22,388 to 22,477 zone but close above this. Let's discuss the open interest data. The highest call OI is at 23,000 with 150 lakh contracts, followed by 23,200 with 93.74 lakh contracts sold. The highest put OI is at 22,000 with 104 lakh contracts sold. The put to call ratio or PCR stands at 0.85, indicating a slight bearish sentiment. Significant changes in the OI in last session suggest active trading interests and potential bearish expiry. Now let's discuss some possible price action we might see tomorrow. For a neutral scenario, the support zone is between 22,575 to 22,600 and the resistance zone is between 22,780 to 22,800. If Nifty opens within this range and stays there in the first 15 minutes, we can expect high volatility and consolidation throughout the day. Now let's discuss an effective strategy for neutral option sellers in Nifty. If Nifty opens within the 22,575 to 22,780 range, there is a short iron Condor trade you can follow. This setup provides a weak 3:1 risk reward ratio, but the probability percentage is quite good with 78%. In case Nifty shows a directional movement, we can adjust the trade by bringing the opposite sell and buy strikes closer to reduce potential losses. However, it's crucial not to overdo these adjustments as reversal could lead to even higher losses. Remember, it's important to accept losses if the market moves against our view. We shouldn't fight the market too much. For this strategy, set your stop loss at spot price of 22,440 on the downside and 22,975 on the upside. Now let's discuss possible price action from bullish scenario. We can consider buying around support levels around 22,600 to 22,574 with a target of 22,700 and a stop loss at 22,534. If we see two consecutive 15-minute candles closing below 22,574, we should still close the trade in loss. Here is an interesting trade to follow while buying at support levels. If you are a directional trader with bullish view and Nifty approaches its immediate support levels of 22,600 to 22,574, this bull call spread trade setup is for you. This trade offers an impressive risk to reward ratio of almost 1:1.5. If Nifty continues a directional movement in the opposite direction, we can bring the sell strike closer to reduce the potential losses. However, just like in the previous scenario, we should avoid making too many adjustments. It's important to accept the loss if our view turns out to be wrong. From breakout trade point of view, we don't see any good risk to reward trade with bullish bias, so we shouldn't be trading this. Let's now discuss possible price action from bearish viewpoint. We can consider shorting around the resistance level of 22,782 with a target of 22,700 and a stop loss at 22,866. If you see two consecutive candles closing between 22,823 and 22,866, we should still close the trade in loss. Here is an impressive trade setup to follow at resistance levels if you have a bearish viewpoint. Just like bullish scenario, you can follow this bear put spread trade. The levels can be adjusted as per your risk appetite. This trade should be giving a risk to reward ratio of 1:2. Please follow the levels given to close the trade either in loss or profit. Now let's discuss possible price action for breakdown trade from bearish viewpoint. We can enter below 22,660 with a target of 22,600 and a stop loss at 22,750. If Nifty opens with a gap up and doesn't cross below yesterday's low within the first 15 minutes. If we see two consecutive candles closing above 22,700 after entering the trade, we should still close the trade in loss. Here is an impressive trade setup to follow bearish breakouts. If you are a directional trader with bearish view and if Nifty opens above yesterday's low and moves below 22,660, you can follow this bear butterfly trade. This setup offers a risk to reward ratio of almost 1:1. We should close the trade if Nifty reaches 22,600. However, if Nifty reverses or consolidates between 22,660 to 22,700, we should be prepared to accept the loss or minor profit based on the closing price. There is no need to make any adjustment with this trade. We should accept whatever comes our way, whether it's profit or loss. Just follow the levels given to close the trade. Now let's discuss the market sentiments which are mixed with foreign institutional investors or FIIs and professional traders showing a medium bearish sentiment while retail clients remain strongly bullish. This divergence in sentiments indicates a cautious approach towards the market movements. To sum up, Nifty 50 shows a mixed trend across multiple time frames supported by robust technical indicators and OI data. Keep an eye on the key levels mentioned for potential trading opportunities. Thank you for tuning in and don't forget to like, subscribe and share your thoughts in the comments.